All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today. And the first thing I want to talk about is that Bitcoin sees small blocks proposal as fees fall to 2014 levels, which there's a lot of reasons for that, regardless of the fact that more people are using Bitcoin than ever, pretty much since January 2017, or January 2018, rather. So with all those people using it, you'd figure the fees would be going back up, but there's a lot of reasons for that. SegWit, Lightning Network, better wallets, and better batching from exchanges, and no malicious parties, namely Bitcoin Cash, sending small little transactions over the network to make it look like Bitcoin is worse than it actually is. Like I said, a number of reasons for that. But Bitcoin has continued without significant changes following the adoption of SegWit, but now a new proposal envisions reducing block size. While this could help with scaling and decentralization, small blocks also mean potentially higher fees as the mempool would fill up faster, and Bitcoin fees have now fallen to levels not seen since 2014, and the reasons include SegWit and other updates on efficiency. The proposal for small blocks was made by Luke Dasher, a Bitcoin Core developer. Another example, this patch would enforce a very simple soft fork, reducing Bitcoin block sizes to 300 kilobytes between August 1st and December 31st. It demonstrates how one can make a truly temporary soft fork. Why just for those times? I don't know. Skeptics view the offer as having the potential to cause another rift in the Bitcoin community and network, possibly leading to a hard fork. After the spinoff of Bitcoin Cash, which then split into two competing projects, Bitcoin has not seen contentious proposals to radically shift the network's qualities, and ideas on how it should scale have included very large blocks as favored by the Bitcoin SV team. Currently, Bitcoin blocks are variable and sometimes go above 1 megabyte. The most recent proposal argues for the case for limiting blocks to 300 kilobytes, a level that would start changing the economy of fees. And at the moment, they have returned to the pre-boom levels of around 6 cents per transaction after short periods of exorbitant fees during the most active Bitcoin trading. And this is the reason blocks need to be small. We should expect world governments to outright ban Bitcoin. And when that happens, large biters will be forced to close down. And the fight hasn't even begun. And that kind of makes sense. I'm not sure if all world governments would do that, but I wouldn't be surprised, especially if it became really, really popular, even more popular, way more popular than Bitcoin is now. That could present a problem for nations in terms of people avoiding taxes and avoiding actually using their totally made-up fiat. Someone says, stop this madness. Last thing Bitcoin needs is yet more contentious forks in this key year for adoption. A soft fork to reduce the block size is a hard fork in all but name. This will split off from the established consensus, causing massive drama and damage trust in Bitcoin. So, large block processing may be effortless for large-scale miners with dedicated resources, but small blocks can propagate more easily with amateur miners, which is sort of true. However, I don't think this will go through, but it is an interesting proposal, I guess. It's kind of random. I suppose it would be a good proposal if the world government started banning Bitcoin outright and any miners and any kind of income coming through Bitcoin. Then it probably would be better as a smaller block size because then people could go back to GPU mining it. But even still, kind of interesting. I figure if that was the case, you would need to fork it a little bit away from SHA-256, so ASICs can't be on it anymore, so that people could just GPU mine it along with that 300 kilobyte block. But again, this is just a proposal. It's just a suggestion by one of the Bitcoin developers, and I doubt it will go through, but it's an interesting suggestion. But honestly, this would only work, again, if governments started banning Bitcoin en masse. So, moving on to more Mt. Gox news. Mark Karpellis and Brock Pierce clash over Mt. Gox relaunch. So, this is just the worst idea ever. A fight over the ownership of Mt. Gox has broken out between Brock Pierce and Mark Karpellis after crypto billionaire Brock Pierce, although, is he a really crypto billionaire? Is he actually billionaire, Brock Pierce? Wasn't he just like a child actor and paid to shill EOS and stuff? How is he a crypto billionaire? I don't know, whatever. Crypto billionaire Brock Pierce announced plans to relaunch the renowned Mt. Gox exchange, a platform which famously collapsed after suffering the worst Bitcoin hack in crypto history and left countless investors penniless. Pierce's Gox Rising Civil Rehabilitation Plan, I can talk, I promise, proposes to resurrect the exchange and pay off its outstanding creditors with newly credited tokens that represent shares of Mt. Gox's remaining assets. That sounds like a great idea. One sip of water. That sounds like an absolutely fantastic idea. I don't know how this would ever be a bad idea. Despite recent evidence emerging of Mt. Gox trustee Kobayashi selling off huge amounts of Bitcoin between 2017 and 2018, it's believed that the deceased exchange still has over 150,000 Bitcoins and 630 million in reserve. And Pierce believes that redistributing this surplus will be the most effective way to reimburse investors and rebuild the brand's heavily damaged reputation. One of the main problems with this revival plan, however, one of the main problems is that Brock Pierce may not have sufficient rights over Mt. Gox to see it out. Of course he doesn't. No purchase agreement was ever even drafted, and the court didn't approve the LOI. I didn't hear this price until recently either, and Tabane has no record of any payment for the shares. Mt. Gox official shareholders doesn't list Brock Pierce anywhere. Mark Karpeles says, so according to Mark Karpeles' tweet, no official sale of his 88% equity stake in Mt. Gox ever took place, despite Brock's public assertion. A letter of intent to purchase Karpeles' share was allegedly never approved by the courts. However, Pierce states a deal did go through, but Karpeles quickly requested to rescind the purchase agreement after. Mark knows he sold his 88%. He even sent a letter of confirmation asking me to rescind the agreement shortly after signing. I want creditors to receive the entire surplus. Mark is hoping to pocket 700 to 800 million. Do you trust Karpeles? No, nobody should trust Karpeles after years of him completely damaging Bitcoin for basically life. But this is terrible. So Brock Pierce basically wants to resurrect Mt. Gox and then basically have a Mt. Gox token that you would be able to receive and then trade for Bitcoin. The problem is that token has no real value assigned. It would be like some odd millions in these tokens that they basically just make up out of nothing. And so then they expect people to put their Bitcoin on Mt. Gox. Because this is how it would have to work. Otherwise, how are you going to get the Bitcoin? People would have to put their Bitcoin on Mt. Gox and then sell it for this Mt. Gox token, I guess, so they could probably get other tokens or coins with it. But no, that's a terrible idea. Basically trading your valuable Bitcoin so that you could pay people that lost their Bitcoin a while ago. And don't mean to say that I don't feel sorry for you, but that's a useless token that you just made up out of nowhere. I'm tired of exchanges doing that. So, moving on. Take 2. Ethereum is getting ready for the Constantinople hard fork redo. So the network upgrade dubbed Constantinople, not Istanbul. It used to be Istanbul, not Constantinople, and yada yada. Yeah, they might be giants. Come on, get the reference. Would have introduced a series of backward incompatible changes, also known as a hard fork, to the world's second largest crypto. Yet the bug discovered led to a delay, followed by a plan to try once again in late February. So, with the code expected to activate sometime during the last week of February, specifically at block 7,280,000, Ethereum core developers are confident that Constantinople won't fail this time around. I suspect it'll go as planned, they say. The block number has been set, and the upgrade is hard-coded in the clients now, so it's going along just fine. Adding that the valuable lessons are learned from every hard fork. Jameson said that one of the more important takeaways from last January's hard fork attempt was better communication with miners to let them know about the upgrade. That's going to destroy their profits even further, along with ASICs. Yay! So now there's ASICs on Ethereum network. There has been for quite a while. So that's why your GPUs ain't making nothing anymore, other than the bear market. That has a lot to do with it as well. But then the block reward will go from 3 to 2. So that will make it even more difficult for you to mine Ethereum. So if you're a GPU miner, once it goes down to two Ethereum per reward, that's gonna really savage your income a lot. So I think the only hope for that is ProgPow to get rid of the ASICs at the very least, and at the very least you might go back to where you were in terms of your profitability, at least now. Interesting. A lot of upgrades in it, but one of the worst things is definitely that block reward for Ethereum, because I don't believe that block reward reduction don't believe that block reward reduction will actually raise the price as Bitcoin having typically has done in the past. So back to this website with the most ads I've ever seen. The first U.S. pension funds take the plunge on crypto investing. So 2 pension plans in Fairfax County, Virginia, are anchor investors in a new $40 million venture capital fund, according to a statement from the company. Other investors include an insurance company, a university endowment, a private foundation. So many institutional investors, which crypto enthusiasts believe will be drawn to digital assets because of their volatility and potential outsized gains, have been deterred by market manipulation and a lack of regulation. The Virginia pension funds join a handful of institutions to invest in the crypto world, including Yale University, the second largest endowment in higher education that involved in a digital assets fund last year. Fairfax County Retirement System manages 3 separate defined benefit plans, 2 of which invested in the Morgan Creek Digital Fund, and all kinds of other stuff. Oh, wow. You know, Pompliano said his new fund is structured like a traditional venture capital fund that will invest in the equity of companies in the blockchain and digital assets industry. The fund will also hold a small percentage of its value in liquid cryptocurrencies such as Bitcoin, said Pompliano. Bitcoin lost about 75% of its value, though, in 2018. So that's not good. But interesting that pension plans and a lot of institutional investment on the way. Again, Game of Thrones, the dragons are coming, the dragons are coming, all the zombies and the dragons, they're coming, I promise, they're all coming. So we got pension funds, we got Bitcoin ETFs, backed futures, institutions, even JP Morgan saying, hey, you know, Jamie Dimon, like, hey, if any of my investors start trading Bitcoin, I'll fire them. And then, like, as soon as that is over, he's just like, gets on his phone. He's like, let's set up a Bitcoin trading desk. I funded it. I lowered the price. Now let's buy in. What a great time to buy in. So, hey, things are moving along. That's good, though. Next, man demands answers after police raid damages suspected Adelaide drug house. Turns out to be just a cryptocurrency mining setup. So, whoops. Oh, the police just did a little whoopsie there. Oh, not a big deal. A man is demanding answers and considering legal action after his northern suburbs home was damaged during a police raid. Acting on all information from the public, police forced their way into a Smithfield Plains home to search for a possible grow room on Monday. Instead, the officers stumbled across an elaborate cryptocurrency mining computer setup that requires a ventilation system. Cryptocurrency, so in crypto mining, specialized computers, we don't need to read any of that. Anyway, so I watched this video a little bit. It is kind of interesting. We'll mute it real quick here. So this guy gets this letter on his door, and his door is completely bashed in. And so, like, once you go inside, there's this room here, and it's been completely kicked in. And you can see, like, the molding there is just all jacked up. Here's this crypto miner, and it looks like he's got, like, a little ant miner. It looks like he's got an ant miner or something like that on the top there, and a GPU rig. You know, nothing too big. But he's got some tubing that comes out to the window, and it looks like the police maybe have disconnected that tubing in the back, but you can see it going out the window there. And if I turn it on for you, the sound, you should be able to hear it anyway. For some reason, no, it's just still totally muted. But you can hear it running. It's pretty loud, so it was probably neighbors or something like that looking in the windows or whatever. I don't know if this is a second floor or first floor apartment. And they looked in the window, and they must have heard it through the doors and probably seen this ventilation. So they were like, well, this is obviously a drug grow room. And then he tried to call the police afterwards, and they basically just hung up on him, and, like, nobody will answer his messages or anything like that. So, like, who's going to pay for all these damages in his house? And the police are just like, it's probably best that we just hang up. We made a mistake, so let's not man up to our mistake. Let's just hang up on him. So, you know, crypto news, I suppose. I like how this website is called The Advertiser as well. And, well, it's Adelaide now, but it just says The Advertiser, and there's just ads just plastered everywhere. So, like, yeah, no, I mean, that makes sense. Like, he didn't actually have to call it that. Like, I got that from the absorbing this. I got you. Anyway, so I thought that was kind of funny. Not funny for him. Very unfortunate. Hope he gets his money back, or hope he, you know, gets a repair job done from the police or something like that. But make sure you tell your neighbors or something, like, what you're doing. I don't know. I don't know. That's a breach of privacy. But whatever. Interesting news. Anyway, we're on CoinMarketCap here. We were at 121 billion market cap. Still haven't moved. Yesterday we were at 121 billion market cap, so we just really haven't moved at all. Still just trading totally sideways from those big increases a few days back. It's probably about 4 days ago now. Interestingly, here we have EOS here that has just a little dongle there, a little dongle pump on the end. But winner of the day, we got Gemini dollar. Wow, what a pump. Looks like Gemini is preventing people from selling their dollar again, so that's pretty cool. Good job, Gemini dollar. Look at all that demand that they refuse to sell. $1.14, really stable coin there, Gemini. Really good job, guys. I love these stable coins, how they just rocket up to $1.14 and just dive down to 88 cents when they're supposed to be $1. Really good job with your stable coins, guys. Komodo way up as well. Loser of the day in the top 100. Veritasium. Not particularly surprising there. But that's all I have for you guys today. Make sure you subscribe to the channel, like the video. That helps me out a lot. My social media in the description below. My Twitch, my Twitter, my Steam. Follow me on those if you get the opportunity to do so. That's all I got for you. But as usual, I will see you guys next time.